Welcome to the Sazmining podcast. At Sazmining, we are bringing you into conversations with today's industry leaders in blockchain and cryptocurrency. Our goal with this podcast is to improve the understanding and adoption of blockchain and cryptocurrency by giving you an insider's look at what's being built and informed predictions on what the future holds.
William Samasegi is the CEO and founder of Sazmining Inc. All opinions expressed by William or his guests on this podcast are solely their opinions and do not reflect the opinions of Sazmining. You should not treat any opinion expressed by William as a specific recommendation to make a particular investment or follow a particular strategy, but only as an expression of his opinion. This podcast is for informational purposes only.
Today's episode is sponsored by BlockFi and Cogent Law Group. Our listeners can visit blockfi.com/sazmining for an exclusive offer for cryptocurrency management, and check out Cogent Law Group for all your legal needs. Mason Jappa is a graduate of Indiana University's Kelley School of Business, where he received a bachelor's in finance and a master's in information systems. He has worked in management consulting, information technology transformations, and as a solution engineer at Fusion Risk Management. Today, Mason is at Blockware Solutions. Welcome to the podcast, Mason.
Hey, good to be on, William.
Yeah, definitely. I was going through everything that you've been doing with Blockware, and it's absolutely incredible, all the research that you guys are putting out, all the work that you're doing in the space. You're not just in one country. You have your footprint really in many different countries around the world. Can you talk about your journey with the company and how you got involved in the space?
Yeah, so we've definitely done a lot of interesting things since we founded Blockware in 2017. So my initial entrance in the space started late 2015, early 2016. I was actually interested in mining before I was interested in Bitcoin and cryptocurrency in general. So my family comes from a manufacturing industry, a wood manufacturing company. My grandfather started in the 1970s. So we had, a warehouse space and some excess energy where I wanted to put in servers. So then I started doing research about, what servers I could put in there, whether it was, hosting data or generating some type of revenue from that. And it kind of led me down the rabbit hole of finding Bitcoin miners. So I started purchasing those in early 2017, and I realized how hard it was to buy a machine from China. You had to have, thousands of dollars in currency. It's not so easy getting Bitcoin, especially back then, right? So you have to get verified and be able to purchase the Bitcoin, which you send to an address to a Chinese company such as Bitmain, hope that it gets there, and then hope that you hear back. And then, lo and behold, 2 or 3 months later, your machines will show up. So we saw an opportunity with fragmentation in the market. And there was a need of a middleman that was trusted and transparent that could become a gateway for North American miners to purchase machines. So after that took place, I called one of the smartest people I know, which was my former business partner, Matt D'Souza. Unfortunately, he just passed away. I'm happy to discuss that, but got some big shoes to fill there. But he actually had run a digital currency hedge fund that he launched in early 2017. So I thought he was the perfect partner. And we launched right at the right time. It was in August 2017, right before the bull run that took place in late 2017, early 2018, when you saw Bitcoin, rise from 5,000 to 20,000 in a matter of moments. And along the way, machinery, which is correlated to the price of Bitcoin, was going up in price. So I saw these machines I bought for my personal farm, appreciate in value, like sometimes even tenfold. So it was very interesting. And, we kind of caught that wave, and we started the business just agreeing to have a base premium price that we charge our clients, very fair, to be 5 or 10% margin on the machine. And then, we grew it from there. And now we're, in many different areas within blockchain, not just mining. And we have, we're vertically integrated. I'm happy to go further into that.
Yeah, definitely. Well, it seems like you guys kind of got your foot in the door early on with the sourcing of equipment, and I'm kind of interested in talking through how you guys went about doing that. So I'm sure when you started, you're kind of in the same boat as of everyone else. You kind of see that there's a difficulty in getting equipment reliably and having a partner in the U.S. that you can deal with more easily to transact and do business. So how did you kind of go from there to being the broker that all these other miners wanted to work through to actually get equipment?
No, it's a great question. And I think, we had some cards stacked in our favor. So first off, back in the day, Bitmain was the main, manufacturer everyone bought from. And I look at the manufacturers back then, and I viewed, Bitmain as having a monopoly, right? They released the S9 in 2016, and there was really no other competitor with ASICs. They all said D3s and LP pluses, AltCoin miners. And interesting enough, they didn't accept USD wire. So luckily for me, I partnered with my colleague and business partner who ran a digital currency hedge fund. So we had the opportunity to get a hold of, hundreds of thousands of dollars of Bitcoin or Bitcoin Cash that was required to pay for these equipment when, retail buyers and even some, institutional buyers couldn't get access to that amount of coin. And secondly, you have to realize when you're purchasing these machines, it's during off hours. So for us, we were young. I'm about to turn 30, so we were all like 26, 25 when we launched this. We would stay up all night and wait for these batch releases to come out. So Bitmain would release batches at 4 a.m. We'd have, a little late night party and stay up quickly. And at the time, we were able to take order fills from our clients, collect in USD, and we'd have funds ready. And we'd quickly convert the amount of funds we required to Bitcoin to pay for the machines, even at 4 a.m., which you can do, of course, as you know. And then we'd send that Bitcoin immediately over to Bitmain, pay for the machine. So you saw at the time there was, first off, timing issues with sourcing the equipment at a tangible hour. Secondly, you took on currency risk. So even if you could get Bitcoin in advance, you didn't know when they were going to release batches. And everyone knows the volatility of digital currency. Bitcoin could have fallen from 8,000 to 6,000, in one day while you're trying to use that money to buy machines, which is, at a stable price at the time. So that kind of evolved over time. And with that, the manufacturers evolved over time. So now there's really two main manufacturers, in my opinion, in the Bitcoin mining space, which is MicroBT, WhatsMiner, and Bitmain, that run the game. And it's become a little more seamless to get machines. And it's really about having the relationships in place. Still, your average Joe will have trouble sourcing machines. We're seeing more supply constraint now than ever, but having those pre-built relationships that started several years ago kind of helped us become top sourcer of machines in North America.
Yeah, and actually you touched on a great point there. Some of the people I've been speaking with have been talking about that constraint just because of what's happening at the foundry, and when they're actually trying to make these chips, everything that happened with COVID has really shocked a lot of these supply chains. And what are some of the things that you're seeing from the sourcing equipment side of things? Are brokers still playing a massive role within the flow of equipment into the North American market, or maybe just talk about some of the trends that you're seeing?
No, yeah, I think that's a great question. So for starts, today we're seeing financing come into play more than ever. And we're seeing large institutions and public companies starting to buy up all the available machines that, prior, the brokers would have a shot at acquiring. So a manufacturer like Bitmain or WhatsMiner controls the supply of machinery. And they do that very intelligently, because for them, if you look at the value of a machine, the value of a machine is the future cash flow that it will earn for you. So a machine's revenue is based off, first, the price of Bitcoin, second, difficulty. So if the manufacturers are releasing too many machines into the market, it'll decrease their profitability. And if you reverse back the cash flow, it'll reduce the price that they're able to sell machines. So it's interesting in that thus the manufacturers are only releasing a limited supply, and they're doing that very strategically. Therefore, these large companies like Riot, like Marathon, like Bitfarms, and a few other players are getting financing from from banks and well-known institutions and buying up tens of thousands of the newest and latest and greatest machinery, making it impossible for retail buyers to acquire, the newest series of miners, which would be like the WhatsMiner M30S series or M31S or the Bitmain S19 series. So then what we're seeing is a transition of all the brokers that used to be able to get that equipment very easily to now putting their time into the secondary market. So the secondary market is a very fun and interesting space where you have people selling used equipment, right? Or whatever they can get their hands on, whether it's infrastructure, transformers, power supplies, PDUs, and then the used machinery, the less efficient and older equipment. So we're seeing a transition of brokers selling in the secondary when they used to sell, the premium equipment because no one could get a hold of anything. With that being said, Blockware and some of the more established brokers still do get allocations from Bitmain and WhatsMiner. And, we kind of have a competitive advantage with Bitmain and these companies because we've been buying, thousands of machines on, a monthly basis for the last 2 or 3 years. These Chinese companies do favor their largest clients. And, that's just the game that we play here.
Yeah, I see like 2 major manufacturers who are dominating the game. WhatsMiner and Bitmain. There are some other manufacturers out there, but their equipment might not necessarily be performing at the same level. Is that kind of one of the reasons why you're seeing that almost like this market where there are many manufacturers, but there are 2 that are really the only ones who are putting out equipment that all the miners are trying to get?
Yeah, I mean, it goes into a 2-part discussion. So, in the Bitcoin mining game, you want to buy the machine that is the most efficient and the most technologically advanced. And it's kind of a race between the manufacturers to come out with the latest and greatest machine, right? We're seeing now this year, at the beginning of the year, Bitmain released the 70 terahash model, which was a huge deal. Prior, there's the S17, which was 50 terahash. There was the Silicon T3 at the beginning of the year. And now we're, towards the second half of the year, and there's 110, 115 terahash machines that have been produced by Bitmain and WhatsMiner. And what you've seen in this space is those 2 companies have had first the access to the chips, which is the most important. Second, the access to the most quality chips, which is the second most important. And thirdly, they have the resources and the vertical integration with distribution that they have a competitive edge over the tier 2 mining companies like Silicon, like eBang, like Canaan, right? Those companies are still in the game. They don't have machinery that competes with Bitmain and WhatsMiner. Their top machines may produce 60 to 80 terahash. So that's why you see in the Bitcoin mining game, you want the WhatsMiner or Bitmain machines. Then there's a whole another ball game where you have altcoin miners. For example, I know Silicon's the leader in Ethereum mining with their A10 Pro series, and they're releasing an A10 Pro. Bitmain had some older Ethereum miners, and who knows, they may come out with a new one. Bitmain's a leader in Zcash mining with the Z15 that came out. Altcoin mining is very interesting. I think if you want to be successful with altcoin mining, you really need to get the first batch of that new miner that was released so that you can be mining immediately. You can chase your quick ROI, and then you flip your machine before it comes obsolete. It's more of a gamble as opposed to Bitcoin mining, which is a long-term strategic play.
Yeah, that's interesting because I mean, you probably have a really inside look at what's happening with the pricing of all this equipment. So kind of to segment it out, you just laid out how these different manufacturers, they're going to have different levels of equipment in terms of how well they perform, how quick you can ROI on them. Many times when people talk about ASIC mining, they're referring to Bitcoin because that's just the standard. We're talking a lot in depth about Bitcoin mining and Bitcoin mining hardware. But then there's the whole other world of ASICs and altcoin mining. And I honestly haven't spoken with anyone in much depth about what that looks like from a hardware side in terms of ROI versus the pricing on Bitcoin miners. Can you speak a little bit about how that looks? You mentioned that when you're altcoin mining, you might just try an ROI and then flip, whereas Bitcoin mining, it's more long-term play. Can you just kind of compare how those ROI times look and what those considerations are if you're choosing to mine with a Bitcoin ASIC or mine with an altcoin ASIC?
Yeah, no problem. I think that I appreciate you circling back on that conversation point. So the way I look at it, miners are the most bullish people on Bitcoin in the entire world. They're investing billions of dollars to acquire energy contracts, set up lean and mean data centers, or whether that's a container or an actual manufacturing site or warehouse, to buy this ASIC hardware. The typical ROI on a Bitcoin miner is can be anywhere from 18 to 24 months. And what miners are doing during that time frame is they're dollar cost averaging Bitcoin. So you can view mining as truly the best way to dollar cost average Bitcoin. The goal of a miner is to generate and produce Bitcoin at a lower price than it would be to acquire Bitcoin on a free market. So it's interesting if you look at Bitcoin's chart from 2018 to 2019. During horizontal and a down period, if you're a hodler of Bitcoin, you either broke even or lost money. Miners during that period were generating revenue and profit, and may have made 100 or 150%, accumulating and trying to catch the next bull cycle. For the altcoin miners, it's a different story. Like I said, you can chase a quicker ROI timeline, but timing is more important than anything. Bitcoin mining is very cyclistic in that there's a halving every 4 years. That's set by the monetary policy of the Bitcoin network, which is coded. And it's very predictable. Investors and traders are fascinated with predictable markets. So as a Bitcoin miner, right now is one of the best times to enter if you buy the latest and greatest equipment, because you can expect to run your machine until the next halving. With altcoin miners, there's halvings that take place in the coins as well. The Zcash halving is taking place in November. So, you want to take that into account. You're seeing, as we call it, a puke of Zcash machinery prior to that halving of the less efficient Zcash ASIC equipment. Because for an altcoin miner, I've had experience in the past where I've ROI'd in 2 or 3 months by getting the Bicycle Giant B right when it came out that was mining Decred, in January of 2018 during this whole crypto gold mine bull rush. You can have those opportunities, and not only can you ROI on the machine itself, but you'll notice machinery is perfectly positively correlated to the price of the underlying asset that it mines. So you can sell your machinery for potentially an equivalent gain that you made from mining itself. So the greatest, trade and exit is I buy a machine, I mine it for 4 months. Let's say I was mining Decred and Decred increased in price from $50 to $300. I made all of what I mined in Decred over that 3-month period. And then I sold my machine for 3 times the amount I paid for. Those scenarios exist, and there's some incredible stories that I've heard within the space of people capturing opportunity like that.
Yeah. Yeah, you definitely want to be on the upside of that versus the guy on the other end of that deal who's buying the used
you could lose.
Yeah.
You could lose that same trade
at the right time. Yeah.
Yeah.
So aside from that, one of the major pieces within mining, aside from the hardware, is electricity cost, and I'm sure that we could dive into depth on how that looks and how different miners are approaching getting the cheapest electricity. But from your perspective, what are you seeing companies doing when they're out there looking for the lowest cost electricity? I'm very curious to hear how you evaluate electricity cost and how you approach procurement of the cheapest electricity.
Yeah, it's a great question. We put out some research in March, right during COVID timeframe, where we developed layers of where we thought the global miners stood from an all-in energy cost. So we broke out the different energy in layers, and it tells a story that there's not as many people that have this 1 cent energy cost as you think. If you have 1 cent energy, you truly have some of the cheapest energy in the entire world. But more importantly, it's not about just chasing the cheapest energy costs, right? You need to have good climate, right? You want a cool climate because these machines produce a ton of heat. So being in a cool climate gives you a competitive advantage because you can spend less money on operational expenditures, cooling your miners. I've heard stories of mining farms in Iceland that just open up their garage as temperature control for short periods of time to get in a rush of cold air. Those could be myths or those could be true. But, or you could have a fan, entering it from the outside, it's cooled air. There's your air conditioning, right? You also need excellent network redundancy. So, you need to have redundant internet, right? Your machines are running 100% of the time, hopefully if you have good machines and all goes well. There's third world countries where they don't have good internet. There's some interesting things being developed with like SpaceX and, satellite internet. I haven't seen that come into play yet. And then as well, you need good politics and regulations, right? And that's very key. So if you look at, what's happened in Washington, what happened in Plattsburgh, New York, in the States, what happens in China and Venezuela, there's not good relationships with the politicians and government. In those third world countries and even in countries of China, you can have your mining farm and all your assets seized at any point. So having that political security is very important. So the answer is it's not just a race to the cheapest energy. There's several factors that come into play. And in our opinion, the best place to mine in the world is the United States. You have an excess of energy. You can find good climates or you can, if you're in Texas, you can do immersion system and immersion cooling where, you don't have to worry about cooling your miners. And you can you have very strong politics and regulations and redundant internet. It's something we take for granted. So having those, 3 to 4 key factors truly play to where you should mine. And we think the United States is positioned to be the best place to mine in the world.
Yeah, I mean, it is a really interesting topic to dive down where when you're choosing where to mine, there are all these different variables that you're balancing, and what variables are you giving a certain amount of risk to. So for example, people find it, if you're mining in the US, as very, very safe as compared to mining in somewhere like China or somewhere like Russia or wherever else it may be. But you might have cheaper electricity in that other location, so you're kind of balancing that. But one of the major things that, at least from a lot of the discussions I've been having with people in the industry, is that within the US, you really do have the opportunity to find some really cheap power. I mean, you might be looking at smaller pockets, you might be trying to look at stranded power assets or whatever it may be, but then you can have the benefit of a good climate, a regulatory environment that's favorable for mining, and then be able to run very efficient, low-cost operations. So it seems like a lot of that mining, as you said, is starting to move to the U.S., and we're seeing capital groups actually come and try and look for projects in the U.S. as well.
I couldn't agree more. I think the U.S., our part of our company's mission statement, is we want to geographically decentralize mining. The mining hub of the world is China. We estimate that 65% of the global hash is based in China. With that being said, it doesn't mean that Bitcoin's centralized. 65 of the hash being there doesn't mean that one entity controls 65%. There's 100,000 individual miners in some very large farms that, we were in Chengdu last year. We saw, a 300 megawatt facility. That's massive. It'd probably be one of the largest in the States if it was here. But that doesn't mean it's centralized in China, right? We're trying to geographically decentralize mining, and part of our mission statement is to bring hash to the United States. And by doing that, we're bringing awareness and we're providing, network security that is going to go a long way. And we don't want to be lost in the dust and miss this race in Bitcoin mining. If we wait too long, we're never going to make it. So I think it's important for funds and institutions and even retail participants to, take action now and join the cause and mine in the States. And to your point, yeah, there's incredible power opportunities. I mean, you look at Texas, there's that has some of the most and best excess energy and energy contracts in the world. If you can figure out how to cool and mine there, you can be very successful. People have also, target Washington State. We see people partnering with, steel mills. We have a facility in Calvert City, Kentucky, where we partnered with a steel plant that has a lot of excess energy and actually owns the substation with the government of Tennessee dating back to the 1930s. That's having a good electricity contract and good political, regulation in place.
What are some of those key aspects that, as a miner, if you're going into It seems like you guys kind of secured it with your place in Kentucky, but when you're trying to balance your regulatory approach while building a project in the state, how are you approaching those discussions? Are you looking at it where you see that you want to build a project there and you start reaching out to some of the people in government, or is it something where that you just pop up on their radar and then when you're getting ready to follow through with a project, you start those discussions? Like how does that process look from the point of view of someone who's actually going and building up a mine in the state?
Yeah, so you have to be very proactive. First thing you identify is cheap land, right? Miners are natively cheap. We look for the cheapest energy contracts, the cheapest land, and the minimum viable product in the warehouse or facility or wherever it is that we're mining. So you look for those things. But prior to doing that, you need to get a hold of the electricity company in the area and find out where your energy source is, whether you're pulling from the grid or you have a direct relationship with an energy provider, right? Like a wind farm or a hydro farm or like a coal, plant, right? Most miners in the States pull from the grid, and, it's a mix of different power sources. So you need to have a good electricity contract, and you need to make it long term. So when you're negotiating, you want to have a 5, 10, 20-year term on your electricity contract. It's fascinating. You'll find that miners hold some of the best energy contracts in the world. And what's interesting is it's an asset that can be so valuable. In the event mining, in 8 years, changes landscape and the big players kind of take over and make it, too competitive for some of us to participate. You're holding a gold mine with like a 2 or 3 cent energy, all-in energy rate, kWh rate, that you can repurpose. You could build an AI data center. You could sell that energy contract to Google. So that's, something that's overlooked. And then the next thing that you need to look out for is, of course, the political aspect of it. There's people think that Bitcoin miners are wasting energy, and they'll lobby against you. There's towns that think that you're going to steal all their energy, and anytime they have an outage in the region, it's from that Bitcoin mining farm that's 20 miles down the way. In fact, it's actually not true. We find that Bitcoin miners are actually, helping the energy network. There's programs that are, very advanced. They're called demand response programs, where during times when a city or an area needs excess energy, mining farms will sign agreements with power companies to turn off their farms during those surcharge times and help reduce the retail energy costs. The most typical time of that is during summer. Everyone's blasting their AC, especially during COVID, sitting on their couch and watching Netflix. Well, you're going to cause a power surge in, New York City. They're going to pull from large energy consumers in the region to account for those surcharges, and therefore those miners are actually saving their cost. And the second part of that, of course, is a lot of miners are also using green energy, right? So I think it gets a bad rep and a bad rap when it's in fact the opposite.
Yeah, I mean, that's one of those things in terms of like public narrative surrounding mining that I think was just very one-sided. I'm not sure how that narrative got started, and it's really just stuck with everyone outside of like the mining community or outside of, I would say, crypto. But you look at the amount of benefits that are brought in from a mining company going into a certain community. I definitely think that mining has an enormous benefit when being brought to any sort of community, especially a lot of the communities where it's actually being brought to, because many times those are where you're going to find economic development zones, those types of incentives to build. And yeah, I couldn't agree more that there are many benefits that tend to be overlooked in the public narrative surrounding mining.
Yeah, you're spot on. That was, a couple of points I didn't address. Yeah, you're employing, you're providing tax dollars, providing towns like where we're and us and Core are located, great jobs that are high pay. They're learning and participating in something that's greater than themselves. Bitcoin enthusiasts, have true belief in the free market and what they're bringing to the table. So I think it's fascinating, and people are happy about it. So
yeah, and I want to get your view on where you think the industry's going, right? So right now, I feel like every single like month that goes by, there's new news, there's things happening. But on a scale of maybe like 1 to 3 years, what do you think is going to be happening in the Bitcoin space with the difficulty, with the amount of capital coming into the space, and overall just what the overall landscape is going to look like? How many players are there going to be?
I think so right now, at current time and place, we're wrapping up on China hydro season. So I think, hash right now is very high. I'm expecting some less efficient machines to turn off, in the short term and things to balance out. Bitcoin as a whole, it's a checks and balance system, right? The difficulty is driven by the total amount of net new miners and new hash subtracted by the miners that turn off the network, which gets you the total net hash. And just about every 14 days, you'll see a new difficulty adjustment, and that's driven by blocks, right? And typically there's 2016 blocks between each difficulty cycle, and the difficulty adjustment will actually be based on the time it takes for miners to mine that block. So if it's above 10 minutes to mine a block on average, then the difficulty will increase. If it's below, then the difficulty adjustment will decrease. So that's just education on what difficulty means. That being said, there's a ton of new miners that are going to hit the market. We talked about these large public mining companies, and some of the largest miners are miners you don't know about, and they prefer to be private. These type of companies are, bought up, all of the S19 and all the latest and greatest miners that are coming out, and tens and thousands of those machines. So those new machines will be coming online over the next, 10 months. When that happens, you'll see the less efficient miners and less efficient machines turn off, right? So there should be a checks and balance system. With that being said, our prediction is, we're very bullish Bitcoin. We do expect hash to continually increase. But with that, if Bitcoin increases in price, then there's going to be a balance, because, miners will still be accumulating and achieving the profit and revenue streams that they would have, at today's level, with current difficulty and price, with hash where it is. And, on a 3-year outlook, I expect hash to continually rise as more large players enter the space. You may see a shakeout of retail, over the next, 3 to 8 years, where it becomes harder for retail to participate, right? They're not going to get the best energy prices. They may pay, a little premium on machinery, and the largest players will have a competitive advantage. But, that's the glory of the Bitcoin market. It's a free market, right? If you do have the cheapest resources, if you do have access to the cheapest energy, land, and if you do have access to get machinery at lower costs because of the amount of capital you deploy, then you should win. That's a free market.
Yeah. And do you think, well, I guess in that context, you mentioned that the retail investors might get shaken out. How are you defining retail from a capital standpoint? Like how much capital, or I guess how little capital do you have to be considered retail, where you think you're not going to be able to mine anymore in the next 3 years?
Yeah, it's a great question. So I think of a retail miner as someone that, purchases between, 1 and 20 or 30 machines, right? With the newest and latest greatest machinery costing, anywhere from $2,000 to $3,500, you'll see those individuals investing anywhere from, $3,500 all the way up to, under $100,000. And you might think that's a large number, but, I assure you that, I still consider that in the retail range. And then from there you get into, small miners, mid-sized miners, large miners, and the scales from there go from people purchasing, 30 to 100 machines, 100 to 500, 500 to 1,000, and then upwards. But with that being said, a part of our company position is that, we'll take on a retail client. Well, someone that wants to buy one machine and requires a ton of education, requires a lot more time than, someone that gets the game and has, wants to buy 50 machines. We invest time, and I spend, most of my time and the rest of the Blockware team, does was educating individuals and helping them enter. So companies like us, we also provide them cheaper energy rates than they would usually get. And that's a part of our motto and pitch. We don't want retail to get shaken out. I think it's important to have more participants in the network. With that being said, it may become more and more competitive where, companies like us may not have the energy costs or the capability to assist retail in entering. So it'll be interesting to see how it all shakes out.
That's a good segue into just talking about how we think like the capital formation is going to continue to transpire in this market. I mean, right now we're seeing a lot of groups that are looking to deploy capital here in North America, and you mentioned earlier, and I agree with this, that if you're a miner, you're as bullish as they come on the future of Bitcoin, and you are in a sense dollar cost averaging into Bitcoin. You're producing a certain amount of Bitcoin continuously. You're producing Bitcoin every single day, and you're building up a reservoir of Bitcoin over time. I mean, where do you see mining going in the next 3 years in terms of the amount of capital coming into this space?
I think there is a ton of capital that it will be entering mining over the next 3 years, and it's going to greatly outweigh all the capital that's been deployed to today's date. There's very reputable institutions and hedge funds and VC funds that are investing in mining. You just saw that DCG spun off Foundry, right? They're already giving loans to miners in the tens of millions of dollars, so that they can expand and buy more infrastructure and buy more machinery. I'm a managing partner in a fund called Blockware Mining Fund. We actually accrued the first of its kind loan where we actually did a sale and lease back of equipment that we already owned to get a loan to buy more equipment. So essentially, we put up 1,000 or 700 machines that we already owned as collateral against a loan with a company called Arctos. Since then, you're starting to see DeFi come into play big time within the financing game, and these really well capitalized funds and institutions come in and they're more willing to invest in the mining because they understand it now. People are educated and people believe in Bitcoin. You saw Paul Tudor Jones, one of the greatest fund managers of all time, allocate 2% of his global assets into Bitcoin. That speaks for itself. Therefore, these well-backed institutions are like, oh, Paul Tudor Jones, then I want to get into mining because mining is dollar cost averaging. It's a way to produce Bitcoin cheaper than it is to buy it on the free market. And you'll see the more reputable mining companies, acquire these funds from these institutions.
It makes sense when you look at it from a macro perspective, looking at how Bitcoin's an uncorrelated asset. I mean, I think that as more institutional investors get educated on Bitcoin and cryptocurrency and how it could benefit their portfolio, I think that's going to be a huge catalyst for a lot more capital to come into the space.
Yeah, and we missed out on Fidelity. It was 5 months ago. I saw they listed like 10 Bitcoin mining specialist positions, all throughout the United States, where they're hiring people to research and analyze and do who knows what within Bitcoin mining. They'll be relatively private, but they're certainly in the space. You see some other very large institutions like Fidelity that are taking more of a private entry into this space. So I think indicators like that speak volumes, and you don't need me to sit here and tell you that.
Yeah, well, overall, you're really on the front lines with everything that's being built. You are very, very involved, not only from an operational standpoint, but from a actual brokering and ordering all this equipment. So my question here is, based on everything that you're seeing, everything that you've been exposed to, what's one piece of knowledge or one belief that you hold to be true right now that many people listening might not necessarily be aware of or agree with at this point in time?
My hot take is Bitcoin mining is here to stay. My position is that we're at least for the next 4-year cycle, I think it's an excellent time to enter. The halving just took place. You have the opportunity to buy the newest and most efficient machinery that just came out and run it for the next 4 years. People get caught up in ROI and forecasting. One thing that people miss in these ROI and forecasting is right now, in my opinion, the profitability of these new machines, depending on your energy costs, is at a low. When you're actually forecasting your mining revenue and profit, you should be taking the mean return over the period that you plan to run the miner. So if you're forecasting, you should forecast, what you expect to return over the next 4 years. With that becomes a very complex model, right? And you're going to have to guess and make educated guesses. So within that guess, you're going to have to speculate where Bitcoin price is going to be over that time frame. You can run multiple scenarios, right? Let's say Bitcoin hits 50K in 4 years. That's great. My mining will have been very successful. What's also important is your strategy as a miner. You can take several different strategies. You can be a hodler, where you will accumulate all of the coins that you mine and you don't sell off, and you cover the electricity expenses and the other expenses out of pocket with, US dollar fiat. Therefore, let's say in year one, Bitcoin right now is at 10,500. All of the Bitcoin you mined in year one, if in year 3 or 4, if Bitcoin's at 50,000, that same one Bitcoin you had in year one is worth 50,000, 4 years later that you accumulated. So when forecasting, your strategy is extremely important. And then another thing that I see people miss when they're running these forecasts and ROI models is that the machinery and the assets you have an exit value. So even the S9 that came out 4 years ago and is nearly obsolete to most people in the world still has a value. So you should take into account the value that your machine can potentially be sold for in 4 years and make that a part of your model. So my belief is that people get caught up in ROI and forecasting way too much, and they're not properly forecasting. And these are the many conversations I have on a daily basis with very smart individuals that I think they miss. So I have a heavy conviction in Bitcoin mining. I'll be here to stay, and I think Bitcoin mining will survive for many years to come, even for the retail participants.
To thank BlockFi for sponsoring today's episode. BlockFi provides wealth management products for crypto investors. I personally hold my crypto with BlockFi because they pay me up to 6.2% interest annually on all of my crypto holdings. At Sazmining, we've hooked up all of our listeners with a special sign-up bonus. All you have to do is go to blockfi.com/Sazmining and sign up. Again, visit blockfi.com/Sazmining for an exclusive bonus offer. It's a no-brainer to earn additional interest with BlockFi. Today's episode is also made possible by Cogent Law Group. Finding reliable legal representation in blockchain is one of the biggest challenges when building a business. You need to make sure that you work with a law firm that understands the legal frameworks that apply to the industry and has the ability to strategically help you grow your business. When researching law firms for Sazmining, I found that Cogent Law Group checked all of the boxes. Not only do their lawyers have expert-level experience, but they also understand the blockchain industry. Cogent Law Group gives you access to high-end lawyers without breaking the bank. Next part, which is not necessarily blockchain related, what is your favorite book?
I gotta go with the J.R.R. Tolkien Lord of the Rings series. Read all the books several times as a kid, watched all the movies several times. I just love it. There's so much messaging that resonates. You can craft your beliefs, and it's just a great story. I like the fantasy and the idea of living in another world.
Yeah. Yeah, how many books were there? Because I honestly, I haven't read any of the books, but I've watched the shorter form of the movies, but I binge watched them all in like a very, very short period of time.
No, that's a good question. I mean, when you factor in The Hobbit, I think there's a total of 6 books. and with that, they took The Hobbit and made like 3 movies out of it. I think they're making like an Amazon series that's coming out, which I'm super pumped about. But I think they're great reads, and if you hadn't had a chance, get to it.
Yeah, got to read about Frodo and his journey.
Yeah, it kind of reminds me of Bitcoin.
Yeah. Awesome. Well, aside from favorite book, what is your favorite movie?
I love all the Ocean's movies.
Oh, I thought you were going to say Lord of the Rings. Just like
no,
Lord of the Rings.
I'm not that much of a loser. I promise. I'm not. God, I love the Ocean's movies, man. Danny Ocean's like my idol. Gotta love the intelligent and well polished criminal. Throwing some gambling. I'm a big card player. I think it crafts the perfect storm for the greatest movie series ever. I hope they make more.
Yeah, all those movies are interesting. Like, I mean, the Oceans especially, but I think that any type of movie, like even like 21, I thought that movie was really good. Those are interesting. So you're a big card player? Yeah,
I've played cards my whole life. I think my father, who started teaching me how to play Hold'em when I was like 8 years old. I grew up with 3 brothers, so we had a lot of competition in my house, and amongst my 3 brothers, we're all like 7.5 years apart. So there was a lot of us in a short time frame, and we competed in everything. So it turned us all into becoming pretty good card players, and I'm happy to be a Bitcoin and Bitcoin miner. I think that's also, has some sexy appeal to it, just like, being a poker professional does, right?
Yeah.
Yeah, you see in blockchain, like you see a lot of poker players and gamblers in blockchain naturally. Like some of the biggest names that in the blockchain space, they're all playing these like online underground games for like God knows how much money, several Bitcoin on the line on a daily basis. Just like Bitcoin mining, right? There's a luck factor in mining a block.
Yeah, and this has been a lot of fun speaking through not only the crypto stuff, but everything on the book recommendations, the poker side especially. So really glad to have you on. Before we sign off, is there any place online that everyone listening can go and connect with you or the company?
Yeah, no, I appreciate that. This has been a great session. It's always fun sharing about Bitcoin mining. It's something that I'm sure we could sit here and talk about for 10 hours in the vast array of subjects. But definitely go to our website, blockwaresolutions.com. You'll find a contact us button there. If you're looking for education, if you're looking to get into mining, if you have any questions, we're always happy to help. You'll likely get a reply from me. And definitely check out our research. We have a research and publication section. We list all the podcasts and research that we've written. It's just worthwhile, and it's stuff that's been shared around the world. So we look forward to potentially meeting you.
Definitely. Go check them out, guys. Thank you for listening to this episode of the Sazmining Podcast. Be sure to follow us on social media and YouTube for the latest updates and previews of upcoming episodes. Full episodes and transcripts can be found on sazmining.com every Thursday. If you want to hear us interview a particular guest on a future episode, please reach out to us at podcast@sazmining.com.